Hello everyone. In the past weeks we have witnessed a good correction in gold. This was right after the re-election of Trump as President of the United States. Gold prices faced their sharpest weekly drop in over 3 years, driven by a stronger US dollar and changing investor preferences. Investors are now buying riskier assets like stocks, Bitcoin etc. in the US over traditionally safe haven gold. Gold has been in a rally since this March 1st till its peak and gave returns of 26.7% to investors. Even after this correction, it's still trading 16.7% higher from March beginning. As you see, it's evident that gold is now trading at discounted levels. In this video we are going to discuss how this correction is a great opportunity and why you shouldn't miss this one. Welcome to Doing Stocks. Before we start today's session, let's discuss what an ETF is. ETFs are like a combination of stocks and mutual funds. Just like mutual funds, the fund house of our ETF will invest the money in an underlying asset class like stocks, gold, debt, etc. The main thing that separates mutual fund and ETF is that it can be sold in an exchange like shares. Mutual funds cannot be sold in a day like we trade shares. When we go for redeeming our mutual fund portfolio, our funds will be redeemed at the closing value of fund. ETF can be sold anytime, in a day, and the funds will instantly come to our demat account without any processing delays like in case of mutual funds. Plus, it gives us professional management of funds by a fund house. ETFs can be in different types and themes, however in this video we will be discussing only about gold ETFs. Always remember to buy ETFs that are liquid enough. Or else you could lose your time for executing your buy or sell orders. For making sure your ETF are liquid enough, check volume of trade happening in a day for that ETF in your broker's app or website. Avoid ETFs with low volume. I am investing in Nippon India ETF Gold Bs. Okay, now let's come to the gold prices. Traditionally, gold price rallies when there is uncertainty in markets, rise in inflation, unemployment, war outbreaks, etc. The recent rally before the correction in price justifies that. We had multiple war outbreaks around the globe like Israel-Palestine, Israel-Lebanon, Israel-Iran, Russia-Ukraine, etc. The inflation and unemployment data were at level highs. In hard times like this, people tend to stay away from riskier assets and pumps money to buy safer assets like gold. The US market gains after election have now been slipped on Friday as markets were down 2.4%. Which states that almost half of that election rally has been slipped. This is a clear indication that hard times are not over yet. When we come to our indices, Nifty is down 4.92% and Sensex 4.23% from last month. Also keep in mind that RBI is slowly moving away from its rate cut plan for this December due to October's high inflation data came out, which was more than expected by everyone. This will also lack investor interest to go bullish on markets for a short term apart from this large FII selling news. So, it's high time for us Indian investors to de-risk our portfolio by allocating some in gold. Also, October witnessed an inflow of 2,000 crore in gold ETFs, which was a surge of 59% from that of September. So, people are buying gold ETFs in India to hedge their risk from correcting stock markets. This is likely going to increase sharply as Sensex and Nifty are in real mess right now. Allocating 5 to 10% of your portfolio in gold ETF is great for limiting risk exposure. Nippon India ETF peaked around 67.58 rupees and now is trading at 61.77 rupees. I am likely expecting a V-shaped recovery in this soon. Consider this as discounted sale of something in supermarket. Use this discount to accumulate. By start accumulating, I don't want you to go full out on buying now. Nobody can time this market exactly. So, start accumulating using a small portion of your capital as there could be further room for price drop. If prices fall further on from here, use that remaining capital to buy more of it. This is a golden rule of investing. You should always have some amount of money with you so that you can averagely accumulate all investment opportunities you see. I hope all of you enjoyed the video and thanks for watching. If you really liked this video, consider it giving a like and subscribe to channel for further updates. Also, don't hesitate to comment down your thoughts.